Good day, fellow investors. I recently received a lot of questions. Sven, could you make a video explaining what you do and whether it creates value for you? And in this video, I really want to discuss my investment strategy, my research platform, my portfolio's performance, so that you can see whether what I do could add value to you from an investing, educational, time-saving perspective. So let me show you in this video what I do. And let's immediately start with the investment strategy, where the core of my strategy and something that I've been doing over the last 20 years is to first focus on owning businesses. You have a business that you can fortunately buy a part of it by buying a stock, but what you own is a business, not a stock that goes up and down in price. You own a business, and your performance, your investment returns depend on the performance on that business over the long term. In the short term, we'll discuss it, the market is crazy, goes up and down, but the long term, the business is there, pretty stable over time, especially if you focus on good businesses. And if you can find those businesses at a fair price, maybe when the market is panicking about something, because the market is always panicking about something, then that's a great buy, and over time you get to great investment returns. And as I said, markets are irrational and short-term focused. And let me give you immediately an example. So this was in June of 2018. China said that they will lower subsidies for the solar industries, and really all solar stocks got smashed back then. So I looked at the complete sector, all companies, about 34 in the ETF, and I found this stock somewhere here that I thought, okay, this is a very interesting one. It had a good business model, interesting earnings, was trading at the margin of safety, and then on my platform, okay, I bought it, and that was a start of it. And then, of course, I looked at the long-term trend. The market was panicking here. You can see here it going down because the market was panicking about Chinese subsidies, and the stock didn't do anything for a while. But the clear trend of renewables, of solar, was there. And of course, it boomed. I made a video about when I sold somewhere, I don't remember whether it was here or here, because it was getting too crazy. The management did some crazy acquisitions, so it got a little bit riskier, and then I sold, of course, and it went much higher, but the risk was there. So now it materialized, and now it is time again to look at solar stocks. Maybe I've updated this one on my platform, maybe I'll look at others. There is time with higher interest rates, but you can see here how the market gets exuberant about something, and then very soon after gets very pessimistic. That's the market, and we as investors, if we look at businesses, owning businesses, we can take advantage of what the market is doing and its craziness. That's the main point of what I do. Because the markets are focusing on the short term, they cannot think long term. There is a clear trend, and still there for renewables, for everything, but all the renewable stocks are going down the dumpster. Which means, okay, Sven, you have to refresh that knowledge about renewables, about stocks, and that's what I constantly do. Yesterday I looked at a copper stock, renewables, because those are also pressured, looked at, okay, when can I buy it? And that's how we take advantage of the market irrationality. Our core advantage is that if we can find a good business, worst case scenario, copper, still good, pays dividends, is good, so margin of safety, then we can buy and wait for the time that the market gets exuberant again. The market is manic depressive. One day it's exuberant, 1 year it's completely panicking, capitulating, depressing. 1 year is that. We as investors have to take advantage of that. That's very simple, at least for me. For 98% of others, not. But that's why I think there is value in what I do. And also you can read more on the sales page of my research platform about what I do, what is hyperbolic discounting, how to think as a business owner. So there is the research platform. The price is $499 per year plus VAT if you are from Europe. If you are from somewhere else, it's cheaper. And then you can read what I do, how I do it, and also I want to explain it here in the video. there is the comparative stocks list. So this is the Excel table. It's a lot more here below. Covered stocks list, so top covered business and current risk reward opportunities. And this is a start, this is an overview, and then we look at where the margin of safety, then you go to the research, possible returns here from risk reward, comment on the businesses, the risk reward. So a little bit an overview, and then of course you click on the research. If you click here on Intel, and if you click here also on the research, it is on free preview, so you can read it. I don't own Intel in my core portfolios. I did own it, sold it when it went higher, so a little bit still learning about the position, about the long-term risk and reward, and trying to nail the right time to buy it. So I've done this just for Intel, I think. What are the possible returns? And you can see that at low margins of safety, and I think I've said in the research, in the 20s, it looks like a bargain. So real bargains, that are what I'm looking for now, even if it looks like a good buy for the long term with the range of possible returns. Now everyone is pessimistic about the semis and everything, but the trend is there. It might be slower, it might be ups and downs. So very, very interesting. And you can see earnings per share. What are the earnings per share? The dividend payout, so also look at from that perspective. What is a return for a 12.5 discount rate? In my case, that's what I'm looking for when it comes to businesses. And then the intrinsic value for Intel, if they can deliver on that growth rate down the road, which is their aim, it's pretty high. However, again, margin of safety, let's look at this. If we look at Intel, a little bit slower growth, the market more pessimistic like it is now, then we can see, okay, margin of safety price, it is something different. So that's always something you have to understand. This is the start, this is explained in the research. If you click here, it should be on preview, so you can enjoy that. And so there are many companies here that have that. I update on earnings, look at the risk and reward, compare it to prices. I do an overview of all the companies twice a year, so that's also something. Explain the businesses, and it is a process, and as I do the updates, as I do the earnings, give yourself time to understand the businesses and see how this works over time. So this is part of the platform, and I think it gives a good overview to people and it gives value. And of course, this is constantly updated. I recently added the margin of safety column that I have started filling here and will fill it up over next earnings, next updates, slow and steady. At what price, for example, this copper stock that I lately analyzed here, at what price it is, this is really, really interesting. Even if at this price it's already a good buy, but this would make it really, really tasty. So watching the copper cycle, watching other things, and this is what I do. This is the summary of it, and this is on top of the research platform. On the first thread, you have everything. Again, a little bit about history, 28-day money back guarantee. I send an email whenever I do something, and you can really see here are the covered stocks. So there are some on preview like Intel and Cisco that you can check. We'll update again on Intel on earnings, also make a video to remind you. And we can see here email sent history updated, and I will send an email. I sent it yesterday, I didn't update it here, but I will send it tomorrow again. And that's what I do. And all below this is really just for indicative purpose, is the research that I have done over the last 4 years that I hope will compound over time. But don't get overwhelmed by this curriculum because it's really a lot of research. Everything is summarized in the first top thread. You have the Excel file, you have the covered stocks, also linked from the Excel file, and that's how the platform works. The most important thing, each week I send an email, you get a link, directly leads you to what to read, and over time you understand the investing in businesses, start learning about the businesses, and you find out how those fit you. That's the core. And of course, the core is if you can find the margin of safety, which for me means, okay, worst case scenario, I get this. If the solar trend doesn't explode, I get that much of a dividend or that much of business growth, no matter what. And that's something that I'm looking. Now I'm looking at copper, commodities. So what is the investment, let's say, in the mine? What is the long-term production on average prices, not the ups and downs of the market, average, and then say, okay, worst case scenario for the economy over the next decade, I get this. When that hits a 10% return, worst case scenario, I think you have a margin of safety, and then you put your money in it. For example, if we look at copper stocks, those have really boomed, but now as copper, recession, whatever, those are weakening again and a little bit down, 24-25%, and I'm starting to look, okay, if those go lower, and copper is usually very volatile, we'll soon start to see value, and that's why you later see also in my portfolios I have some cash, because I sense that there might really be great opportunities in the next 6 months, and that's what I'm working now. One opportunity per year, good investment opportunity, is all you need for a great portfolio. And as I've shown in history, I like to buy things when those are cheap. For example, okay, this is now the course curriculum. I have put everything into one file. If you want to check my portfolios, here are the updates of the portfolio, all under one file. Priorly, I did a new position for every trade, and you can see here the transactions, every transaction. Now I'm putting it all into one file. It's much easier to follow and everything. But if you look at what I do when things get rough, portfolio addition 3 March, portfolio addition 13, portfolio addition 20, 6 April, so completely invested 2020 on bargains, total bargains, so 20 April. So really, when the things get cheap, you start investing. That's also something that I like, and I think that is also an added value. Then I constantly do research. For the last months, I focused on getting new ideas. I looked at 3,000 small caps. If we go to the curriculum, all the new things, I put them at the bottom of the curriculum just for reference. Sorry, here it is. So I did some spawners now in June, finished with that. So new ideas, a lot of small caps. What is this? 3,500 small caps. And then did some analysis on the most interesting. So that's what I recently did, and I always get some ideas, put something into my covered list, and now I'll focus on really businesses that are in my circle of competence, try to find, okay, at what price am I buying this, what's my margin of safety purchase, put them into the covered stocks, update on that, and then see when things start to get into our level of buying, then put the bucket under that raining gold. That's the investment strategy, and it's also key to see at what price you like something. How does it work? As you can see here, emails, I send an email. There is also a thread there with all the history that is updated on the emails. You can read the past emails and understand the process of what is going on. It's a process, the research platform. Now, let's discuss the portfolios. I have a few portfolios based on the same principles with some slight differences. Let me explain. The first is the lump sum portfolio. I started it in 2019, invested 100,000 euros, and that is fixed. I will never add new money. 100,000, that's for my performance measuring. So started with 100,000, and the time will tell how I do, but by just looking at the number that is in the portfolio now. So that's one. The next portfolio is the model portfolio that I started in 2018, and I each month buy something. Did a bigger purchase this month as things are lower, and then I constantly invest 1,000. I started with 10,000, and the goal for both portfolios is if I do 12% per year, I get to 1,000,000. We'll discuss more about that in the performance. Then I had a large portfolio that I said I would try to own 20 positions to learn more about them. I started it in 2020, everything doubled till 2021, so I said, okay, let's start from beginning because there is no point in having a double already from the start. So we started again, but I'm finding it difficult to buy something that's not in the top 5 ideas that I have. So I'm trimming it down over the next few years. yes, years. That's how you have to wait for those business opportunities to evolve. So I'm trimming it down, which is also something interesting to follow. And then we have my private portfolio. We have been investing in our home, all the free money that I had over the last years. So I hope that will be finished. We'll see soon a new office as we move. And then I'll have some free money to invest in whatever I feel fits me personally, which is again an added value for the platform. I hope to start it sooner rather than later, but life, in my case, family, comes first and then everything else. Never invest the money in stocks that you need, and that's what I also do. We'll have real estate solved and the rest of the life is great. I'm losing billions, but I don't want to be Buffett when I'm old and dead. Now, at performance, lump sum portfolio started with 100,000 euros. Now it's 200,000, 203,000. So doubled my money in, what is this, 19, 20, 21, 22, 3.5 years. That's in line with my projections. So if I started with 100,000, no monthly contribution, do it for 20 years. If I do 12.5%, let's say, variance, let's see what we can do better. So 7.5% variance. And the goal is simply to get to 1 million, or if we do 20%, we'll get to 4 billion. We'll see. We are now at year 3 something, so we are at the, if we stay to 200,000, we are at 20% for year 4, which is really, really good. And if I look at my positions that I have just a few now, plus the cash waiting for opportunities that are rising slowly, if I look at the businesses, those businesses have the power to compound at 10-15%. When the market gets exuberant about them, that's 20-25%. So I think the most likely outcome for this is to double again over the next 5 years. Of course, there is risk, there's always risk, but we try to manage that over time, hedge with one position, etc. So that's what I do. Then we have the model portfolio. Again, start at 10,000, adding 1,000 per month, buying something every month to show what I think is the cheapest thing. So now we are close to 90,000 euros. So if we go back here, 10,000, monthly contribution, 1,000 over the years, estimated rate 12.5, we calculate, and we see here we are now at year 4 exactly, so 90,000, that's even higher than 20%, so well in line for the 12.5%, and if we go again, we'll reach 1 million, that's the minimum target. If it's higher, it's better, I'll do my best. So we also have the large portfolio, managing money, my private portfolio, so that's something that I hope will add value to the platform and to the investing mindset behind it. That's the key. Because I'm not a financial advisor, so I cannot manage your portfolio. I cannot say I will manage your portfolio. I just disclose what I do, and usually do that in 20 minutes after I do something, but that's just my opinion on things. As I said, I cannot manage your portfolio. I say what I do, so you have to see how it fits you. That's the key of my platform. So I'm not taking the responsibility of managing your money. I'm just one guy, so always understand it's your money. And that's the key. Then there is also a money back guarantee. You can check the platform. Feel free to check it for 3 weeks. Just send me an email to investwithsven@gmail, my only email. Don't get confused with others, many scammers out there. And send me an email if it's not for you. I'll click on the button, refund it, and that's very, very fast. But you can check what I do, understand the process over a few weeks. The price of it is $499 per year, which is less than a coffee per day. So I think investing in knowledge, education, and the process is worth more than a coffee per day. And therefore, I think really it's a bargain. It's my time for less than, what is it, $1 and something a day. The core of the platform is to look at businesses, learn about investing in businesses, understanding the risks and rewards. There is my market commentary also that I keep there, so feel free to check it. I think there is a lot of value. There are many happy customers. I thank them all for their feedback. And if you have any questions, send me an email. I'll keep doing my best, keep learning, also developing myself, managing that risk and reward. We are all in this process of long life learning, which is investing. We try to do our best. For now, it's going good, has been going good for the last 20 years for me on the same principle, so I just keep doing. And yes, I didn't invest in Bitcoin, I missed on investing in ARK funds. Oh, that's good. Oh, sorry, I missed Tesla because too much risk, so those things, don't expect me to offer those. I look for businesses, quality of businesses, long-term investing, for people who want to spend 15-20 minutes reading what I think and then making a decision for them, helping them make a decision. That's it. No hanky-panky, no trading, no this nor that. Maybe there are some traders that are helped by my fundamentals, but that's pretty much it. Anyway, thank you for watching. Let me know in the comments if you have questions, send me an email, check it out, and I'll see you in the next video.